Hey everybody, what's going on? My name is Matt and welcome back to Crypto Kings, and today's video we're going to be talking about exactly what is going on right now with Shiba Inu. I know so many of you guys have been asking and there is a lot to unpack here. So if you guys are new, make sure to drop a like and subscribe and let's get right into it, folks. So if you guys have already seen what we are working with here on the night, essentially this is not a very good day. And I'm going to go over basically all the aspects of this scenario that led to us headed down into the 40s here and kind of give you guys my prediction at least on what we see in the near future, because let me be honest with you guys, I don't think it's going to be that tragic. So starting off, the first thing that I think is a no-brainer here but is extremely worth noting is the fact that when we look at the day, basically everything is down. Ethereum is down to 4,100. Bitcoin has cracked into the 59s, which is definitely not good. Solana here creeping down to 200. So a lot of things here on the day are not doing particularly hot. Now, why is this a problem? Well, this does, at least right now, seem to be affecting Shib, because Shiba Inu was in a point where it was just trying to sort of level off. It was trying to consolidate in a set price range of, again, somewhere between maybe 56, 57-ish and like a bottom of maybe 50, 51, 52, somewhere around there. It's a little tough to say 100%, but consolidating within a region of like 10, which normally would be very typical for a situation like this for some kind of consolidation. But the issue with this is that during a period of consolidation like this, we're not seeing overly crazy volume. Again, the volume is up a little bit on 24-hour, but it's not particularly crazy. This volume is nowhere near what it was. And the problem with that is that when the volume is lower, I feel like it tends to follow Bitcoin, Ethereum, the big coins. I feel like it follows those a little bit more. When there's no volatile push from Twitter, from social media or whatnot, or some new announcement or whatnot, when there is no volatile push like that, the issue to me seems to be that Bitcoin and Ethereum have more of a bigger push on what happens to the price, and that obviously is not good. But what is good is checking out Webull, guys. Top of the link down below in the description. It is so easy to do. If you guys want to get started trading stocks, crypto, all that good stuff, including SHIB, you guys could do that if you guys use my link, and we'll both get some free SHIB. So if you want free SHIB, top of the link down below in the description. When it comes down to it, guys, again, what we are seeing here is a day that is not particularly high in volume, still way below, where we were a couple of weeks ago. And the problem with that, of course, is I feel that this becomes a lot more reliant on what Bitcoin and Ethereum are doing. Now, when we look at our graph, there is a lot to sort of unpack here, and I'm going to start with the good scenarios and get into some of the lesser good scenarios. So the good scenario, in my opinion, is that when we really look at this, there are a couple of potentially bullish opportunities. The first one being a triple bottom. Now, a triple bottom normally would be some movement kind of like this. It's really just more like a weird shaped kind of W kind of thing, and these are very popular. But essentially, we exit some kind of bull run, we head down, we exit a very good movement, a good period of momentum, we exit it, and then we head down to a new low, a low that is established based on the most recent bull run. And then, of course, we head up a little bit, we fail to cross this sort of path of resistance, we fail to cross it, bounce back again, fail to cross it, bounce back again, and this time we do succeed in crossing it. So when we look at SHIB here, I can see very clearly 1, 2, 3 looking triple bottoms. Again, they're not quite as pretty as a normal graph would be, so we do have to use a little bit of intuition here, because again, nothing is going to follow a textbook example of a chart or a pattern quite the way we like. So we have to round. We have to find what is the best fit, the line of best fit, the trend of best fit. So again, this looks very reminiscent of a triple bottom that is slightly less neat and pretty as some of them would be on Google or whatnot, but regardless, it still does. Again, we exit a bull run here, so we have the first, then we have a little bit of the second, same thing, another bottom, goes again, tries to have a run, another bottom, and then a surge. So again, this is very possible. Am I saying this is going to happen? No, but it is a scenario. It is something that is, again, worth considering. There's no way to guarantee 100% what's going to happen. The best thing I think we could do is to look at all of our scenarios, what looks bullish, what looks bearish, track the volume, track a few other indicators I always like to get into in these videos, and I think that's the best thing that we could do. So, of course, we have our triple bottom here, which you guys can see, and this is inherently bullish. Now, the second bullish thing that strikes, me in a way is the fact that, of course, we have a falling wedge. This looks like a falling wedge to an extent. You could say this is a symmetrical wedge where the bottom goes up to sort of meet the top, and that does, again, look like, probably a more realistic example. You have a symmetrical wedge or a falling wedge. Really, the difference is pretty infinitesimal. It really is just the angle in which this is coming from. So in a way, it looks like a falling wedge. In a way, it looks like a symmetrical wedge. Either way, these movements are bullish. Whenever you see a movement that is a falling wedge like this, something along these lines, it is inherently bullish, and that usually does end in a good way, long term at least. But unfortunately, the falling wedge or the symmetrical wedge in this instance, is more of a long term kind of look from late October. So it is hard to say when that breakout will happen. I'm sure it'll happen at some point. It's hard to say when that will happen. This falling wedge, if we were to zoom out, this falling wedge could continue to go and to go and to go. I mean, this could go on for a much longer time, and it's very possible, we could see a symmetrical wedge or a falling wedge headed down something like this. I mean, it is, again, very possible. And then, boom, breakout. I mean, something like that is possible. It is hard to say, but it will be a long time if we saw something like this. So I don't like to always revert back to that, but it is nice to know that it is sort of making that shape long term. So when it comes down to it, guys, what are the bearish signals? Well, the main bearish thing that I am seeing here is, of course, sort of the fact that we have kind of a rounded top, a little rounded, not fully rounded, but again, same thing, a little bit of a rounded top, and that's never really good. That typically means bearish, at least in the short term. And of course, the fact when we check our Fibonacci retracement, which I always like to do here on the channel, you guys can see it's in the chart the most recent run, and you guys can see this is pretty tragic looking, to be honest with you. This is the only probably tragic thing out of this movement. Again, we have a high at 56. Things are looking up, and then, oh my goodness, flash crash down to like 44, 45, and we head back up, which is good. We were able to, get back to where we should be. We are maintaining above what looks to be the 23.6% line. So as long as we can stay above this line, that would be great, because we would have recuperated 23.6% of these losses from here to here. So that is always nice. Again, the Fibonacci retracement highlights this very well, and typically the reason why you would see a 23.6% line like this is in a situation where there is a flash crash or a massive surge in volume, like you guys can see, and the Fibonacci retracement has to sort of account for that and chart out what could happen in the future if we go away from this sort of flash crash movement, and we did. So we were able to get back up into like the high 40s, and I do think that if things go well, we could get back into the low 50s. It is possible. Again, we could, hang out here in the high 40s for a little while and just consolidate. I do see that possibly happening as well, but it definitely is a little concerning. And I do see why a lot of people on Twitter and social media would be a little bit concerned. So all around, nothing particularly great, but nothing particularly tragic either, in my opinion. Again, do your own research. I'm not a financial advisor, just my personal opinions as always. So with that being said, guys, thank you all so much for watching. I hope you guys have enjoyed. If you all did, make sure to drop a like and subscribe for more daily SHIB vids. I really do appreciate all the amazing support. Make sure to check out Webull. Top of the link down below in the description, folks. Thank you so much. My name is Matt. See you guys on the next one. Peace.